All right. This stage today is sponsored by the Petcare Innovation Prize. I think the last panelist talked about the fact that today is the application opening, so look for that. Consider applying for the Petcare Innovation Prize. Thank you, Petcare Innovation Prize.
I'm a prize winner, so I just want to highlight that as an early stage company in pet, there's really not a lot of other communities that take care of you the way that the Petcare Innovation Prize takes care of you. Mm-hmm. It's a free application. It just opened today. There's Dustin in the back. He's got a little card. It has all the details on it. Apply.
Terrific. All right, so we got that out of the way. Good pitch. The landscape for raising outside equity investment, if you listen to the news, is getting restrictive. Mm-hmm. So we thought we'd kind of talk through today some of the issues. We're going to general picture sort of landscape, what the venture community looks like, how it operates, how equity capital works. But we're going to sort of we'll start with that. Then we're going to talk specifically about what these two investors are seeing for the best prospects for their own portfolios, their own investments. And then we're going to try to leave some time for Q&A. We have 30 minutes. These are two terrific people with a lot of knowledge. So we hope to leave a bunch of time for your questions. All right, my name is Jay DeLong. I'm with Active Capital. Active Capital has been working with Purina for years to support the activities of the Petcare Innovation Prize. And when you win the prize, you join the network, and for years on, you continue with other entrepreneur founders as a peer organization support group. So it's through that activity that I've had the honor of meeting these two. And I appreciate you guys joining us on stage today. It was a great panel that you were just on. I think we started to open up some of the issues about what types of capital there are. But if you would, real quick, introduce yourself and your fund, and then I'll get to some questions.
Great. Good morning, everyone. My name is Skaya. Before the fund, I was, like many of you, a founder. Founded a company called Basepaws. We did DNA testing for animals, for cats and dogs. The company was acquired by a large animal health company a few years ago. And after that, I decided that my mission in life is to bring more money, more capital into the pet space. So Ani.vc is a small fund. We're about $35 million. We invest exclusively in pet companies. So it could be products or services, or actually we really like animal health companies as well. And to be honest, I've only been a VC for about a year. So what you'll hear from me today are things that I'm learning the same way that you're probably learning, and things that I can bring into venture from my perspective as a founder.
But the one thing I'll say, Anna, even though you said you've been only in venture for a year, because you've been an entrepreneur, you're the best type of VC. You're the one that gets it. So I think that's
I
an important
appreciate that. Thank
distinction to make there. So hello, everyone. Good morning. I'm Arif Damji. I'm a partner with Conductuve Ventures. My own background has mostly been SaaS, software as a service, and B2B marketing. And as a fund, we're generalists. So we look across a number of different verticals, mostly B2B, mostly SaaS, but we will look at tech-enabled services. And Petcare has been one of these verticals that about 5 years ago, we suddenly opened our eyes. And I think for a lot of venture funds, they haven't opened their eyes yet. So it's happening, but we're really excited to be here and support, and we want to be an advocate as much as we can for any pet care startup.
I think that's a great point. Conductuve being a journalist, you're not particularly focused in, but you as a partner could be, you're focused into that space, but there's not very many funds that are focused in the pet care space. So Annie is one of those, but I think there's maybe a handful, right? Not very many. Let's talk about the landscape overall, how venture capital sort of works, and maybe why that is. Why are there not very many specifically focused pet care industry VCs? But take me through the formation of a venture firm, all right? Tell me what the premise of your fund, sort of how it works, how you raise the capital, and where you intend to deploy and why, if you wouldn't mind.
No, happily do so. So I think this is the strongest parallel between VCs and startups. And that is that fundamentally, when you start a venture fund, you are a startup. You have to go out there and raise capital. So we have our own investors. We call them LPs, limited partners. And in order to do so, similar to a startup, you have to have a pitch. What are you going to invest into? So some funds will come out and say, we'll just do Petcare. Others will be more generalist. Generally, they want to know why you are credible to be able to identify and lead deals in that sector. Then you have to decide what the stage is. Am I going to be early, which I think your fund is, or a little bit later, which our fund is? You want to think about geography. You want to think about what you really look for when you make an investment. And the last part I'd probably say is you want to think about what your moonshot strategy is. And that's basically how you're going to return the fund. The types of investments that are going to have, for many venture funds, theoretically 50 or 100 times, that get people excited to put money in venture. And so you go through that process, and then you have to go through it again after 5 years or 4 years, because you will deploy a fund, and then you will run out of capital, and you'll need to do it all over again. And so for us, we're on our third fund. Our first fund was $100 million. Our third fund is $200 million. And again, every few years, we have to go out there and showcase with our returns and go and fundraise, much like many people in the room will have to do.
Yep.
And hopefully press on the investments of the first fund.
Exactly.
Those that succeed, you want to put more money into those so that you show greater returns in the later funds, right?
Exactly.
And your fund, so how did it come about? How are you guys starting?
Sure. So Ani.vc is exclusively investing in Petcare. We are one of the very few funds that really has that as our mandate. The mandate really came from me. I believe that Baseball, the company that I exited, was a phenomenal company, and we had a phenomenal exit, but it was very, very difficult to raise money. Why was it so hard for me? I think I really understood towards the end that the amount of education that it took to convince an investor that Petcare was worth it was just too much for me. I just didn't have enough manpower to educate so many people. I'll tell you, and I publicly speak on this, and I'll mention the name of this investor. One of the investors that verbally soft committed to investing in Basebuzz was an investor called Mavrin, very famous investor. They do consumer companies. And then at the end, they pulled the plug. And they pulled the plug mainly because I could not convince the general partner that there was value in pet. They were generalists, actually like very similar like Conductuve. I couldn't convince them. That education, in educating the VC, vertical after vertical after vertical, most funds are generalists, is really hard.
Yeah.
Having a VC that understands the vertical, I really believe that I can smell a winner in pet better than most other VCs because that is the only thing I know. And that's my mission now, is to find winners in pet and to show other venture capital firms that this is an industry worth investing in. And more importantly, this is an industry worth educating yourself on. When you only have X amount of hours in your day, I want to make sure that pet is up there with AI, it's up there with SaaS. It's one of the industries that investors know.
Yeah. So you guys in the earlier panel, you talked about when it's the appropriate time to look for venture outside capital, right? And oftentimes you try to finance with the low-hanging fruit, the capital, your friends, your family, other fools. And then, if you're having some success, then you need some outside additional capital. Maybe go to a formalized angel group.
Correct.
Make a pitch, try to attract somebody who understands the pet space in this case, so that's one of the challenges when we talk about the pet industry, is it's so broad, right? I mean, it's IoT, it's AI, it's alternative proteins, it's exotic animals, it's litter, there's a lot to it.
Yep.
So it's kind of hard for any firm to be specialized in the industry. You kind of have to take a part of the industry, right? So how do you identify, if you decide, you've kind of run the route, the angels are in your cap table now, they're encouraging you to do a Series A, do a priced round, bring in a venture firm. How do you go about finding the right person, not only the right venture firm, but the right person inside of a venture firm to pitch your story to?
No, and it's a valid one, because if someone isn't a dedicated pet care or pet tech investor, then you have this question. So the first thing you should definitely look at is, have they made any prior investments? It is the best indicator of whether they will make any future investments, right? So
In the category.
in the category, sorry. So also holistically as well, but in the category. So have they invested into pet care or pet as a general category? If they have, that's a good sign.
Can I interrupt you? How
Please.
do I find that?
Oh, okay. So if you get a short list of venture funds, which you can look up publicly, right? You might do it by geography, you might do it by stage, you might do it by a number of different criteria, and you go to their website, they will all publicly list their different investments. You will be often able to filter, or you have to do it manually. Once you've done that and you've figured out that they have an investment in the space, you go to LinkedIn and you go and search for that company and you figure out who the board member is from that particular VC or who the investor is, who tags it. That's a great way to find someone who you know is already qualified on the space. And to be honest, the issue with venture is everyone wants to say they'll do everything. So if you just go and say, well, I'll go and ask a bunch of VCs and I'll ask them, do you like pet care? Do you like pet tech? What do you think of the space? None of them, or very few of them, are going to say no outright. Many of them are going to say, oh, I'm interested. I've thought about it. And unfortunately, and I'd love to hear your experience on this, most of them are just not being truthful in that regard, right? They have not made an investment. They have not looked at it as a thesis. And you might waste a lot of time unless it's qualified.
I completely agree. Investors love it when you educate us.
Great
Please come, take that 45-minute Zoom call. Tell me all about your space. Be very careful not to give investors what they want, which is what they want. Don't waste your time on investors like that.
Well, how would you approach them? How do you find, is it through your attorney, through your other investors? Is it through other founders who may be in the portfolio? What's the approach?
Yes.
If you find the partner you think from the fund that you think should be interested in, how do you approach them?
You go first?
I actually haven't really had that happen to me, so maybe.
Oh, no, happily.
To do.
So so there's obviously two parts to the equation. One is to identify, right? And so we talked a little bit about how you might identify through prior investments, through research they put out, through other, listed criteria where they say, I will invest into X, Y, or Z. And it doesn't always have to be direct. It can be tangential. So our first investment into pet care was a vertical SaaS company in pet care. Why was that very easy for us? It's because we do a lot of vertical SaaS. So if you are tackling an area of pet care, there are good tangents to other sectors that you can actually bring. Once you've found the investor or the fund that you want to speak to, the best way is a warm introduction. The best way is to have someone who that fund knows make the introduction for you. Now, in the absence of that, of course, you can try and meet them at an industry event. You could try to reach out to them cold. You could try a million different things. Unfortunately, it's like sales, right? The moment it's a cold outreach, your conversion rate is going to be very low. The moment it's a warm outreach, we know that conversion rates can be much higher, and they'll actually take the meeting and be much more transparent.
Are you open to sharing what you invested in pets?
Oh, of course. So
Any learnings from that?
Of course. So our pet tech investment was done in 2021, and it's a vertical SaaS for pet care, so grooming, boarding, daycare, training. It's called Mogo. They're at booth, I think it's 3100, so go by and say hello to them. And it was interesting. For us, it was our first foray into pet care. And we, as I mentioned earlier, it was a moment where we opened our eyes. We, until that point, again, like many other VCs, didn't necessarily understand or believe that pet care was a venture backable space beyond CPG, right? That we didn't think there could be a B2B angle. We then started looking more and more at the space. I give credit to my dog. He actually opened my eyes, if I'm very honest. Bruce is his name. And it was because I would go to the groomer. I would go to the vet. I would go and we would use boarding facilities, and I would say the software and the technology is atrocious. I am paying so much. They're all booked out. I will pay more for this pet than I will pay for myself very often. And yet I am being given paper and pen. I'm being given a 20-year-old desktop solution. And it just feels to me disrespectful, but just wasteful that we are not being given best-in-class technology. And that's what woke me up to saying this sector is large enough, because you start realizing it, and there needs to be a player or multiple players that will actually go and do that. And that's been our journey in.
I want to also say the last investment that I did, we just closed it, we're about to announce it, is a company called Retrieve Air. It's they rent small airplanes and they fly pets, so you don't have to worry about putting your cat under your seat or having a large dog with you. And very similarly, I invested because I had that pain point. I flew with 2 cats across the country and I hated every minute, but not as much as they hated. I had to put my cat on Prozac afterwards. It was a really big mess. I hated the experience. The minute I met this founder and I heard about this airline that could fly you across the country and it's comfortable and it's for pets, it clicked, right? So when you're building a company and you're looking for funding, I know it's like the perfect, the perfect thing when you can find someone that has your pain point, but build for a pain point that you know exists, because your investor will most likely, hopefully, have that pain point, and then that relationship speeds up really fast.
And as a segue back to the earlier question, if you can find out if that investor has a pet,
Yes.
like, I mean, let's just be honest, right? Everyone in this room understands pain points because of their own animal, their own family member at home. If an investor has never had a pet, has no interest in the pet, has no exposure to the industry, it's going to be hard. So
Stalk them. Stalk your investors.
Yes.
Go on LinkedIn, follow them, see where they present, see if you can see them in person. It's worth your time and effort, because if you know a little bit about that investor, that first conversation, which is the most important one, goes really smooth.
Awesome. I'm going to have one question for each of you, and then we're going to turn it over to the audience. And Pupjoy's founder, Dustin McAdams, will be running around with a microphone. So raise your hand, and he'll call upon you for a question. But I wanted to ask you, last night we had a great opportunity. It was an investor forum, and there's 9 entrepreneurs who were pitching to only accredited investors, only investors in the room. And we saw a diversified group of entrepreneurs. There's all kinds last night. Good pitches, I thought.
Yep.
Can you tell me right now where you think are the smartest bets for your portfolio? What are you looking to invest in right now?
I'll start. I'll throw out a few, and I wouldn't be surprised if you probably have the same ones, because
of course.
I mean, the things that I love right now, I'm going to start with AI, because it's permeating absolutely everything. And we love really, really good ideas that are just catapulted further with AI. We don't love wrappers. We don't love AI only things that you thought of because you and ChatGPT have been chatting all night. Like, we really love it when you take a really good idea and you just add another layer to it. Like Pets on Q, I don't know if Kalina's still here. Like, she was already building what she was building. She's building this great marketplace. She's adding another layer of AI. Investors are going to love that. I really love humanization. Like, I talked about this airline. Like, the way that I treat myself and my kids, that's how we're going to be treating our pets. We're buying them frozen food. I mean, I used to buy myself frozen meals. Now I'm buying my pets frozen meals. We're flying them across the country. We invested in a dog park. That's like a luxury Soho house meets dog park. An amazing place. I want to hang out there. So obviously my dog's going to love it. We invested in really high-end grooming. We love things that treat our pets the same way that we want to be treated ourselves. We're not investing in like the kennels and the kibbles, right? That's before us. We're really thinking about pet as we think about humans. And the third thing I'd say is I'm really bullish on, in general, longevity. It's a really tried and kind of overused word now. But when I see interesting companies that are finding ways to make our pets live longer, it can be a therapeutic, it could be a supplement, it can just be a service. I really am bullish on that space, and I think that in humans, longevity is becoming a big deal. I mean, we all know Loyal and the success that they've had. I really love examples like that. Maybe we're a little bit early on pet, but we want to be early because we're in venture. Off to you.
Makes sense. No, you're right. We have a lot of overlap, which is natural because I think that's a lot of investors are looking at the same thing. So I'll start with the first point on AI. Unless you're producing something that pets will eat or consume or have to be in physically, there's always going to be an aspect of AI in every startup and being built today, right? Whether it's you utilizing it or whether you're building deeper and deeper. I completely agree that if you are an AI wrapper, it's okay, but you're not a fundamentally an AI company, right? Don't come out there and say, I am AI for X and that's all I'm going to be. Think about the pain point you're solving and then say, I'm using AI to enable me to do it quicker, cheaper, and more effectively. That's okay. But I think there's a little bit too much of a push to everyone to say, I'm AI for X. And I just think you need to think about that a little bit. I think in terms of the categories, again, we think about it in a few ways and very similar. One, how do we make our pets healthier? and live longer. So that's where a lot of longevity comes in. That's where diagnostics come in. That's where a lot of the work that's being done at the vet, but also around it, really come in. We also think about, and humanization is a great example here, pet as the new children, right? People are delaying childbirth. They are treating more and more a pet like a family member. And that is going to lead to a greater willingness to spend, a larger segment, right? And demands that you would not have heard of before. And that could be ingredients in food. That could be service offerings, right? That could be upsell. They're going to open up a lot of opportunity. And the last one we'll often think about as well is what we'll call convenience and community. Again, as we think more and more of pets and their owners, their family members, their parents, they want convenience in their own lives, and they want community with others to understand the pain points, to understand what they're feeling and what they're thinking. And so we see those trends and say, what are you backing in that journey? And I think fundamentally at the end of the day, it's should you be venture backable? And that's not a negative. That is, again, if you're venture backable, you have to have an exit of a certain size. It has to make sense. And so you really have to think about the market segment, the path, and the growth. And secondly, what's your right to win? Because we see a lot of startups in the space where you say, listen, if there was a copycat tomorrow, if a big company came in and thought about doing it, why would you be unique? What makes you special? And I think that's an area where if you can really hone it in, it does bring up a lot of excitement in those categories.
Yeah, competition. I agree.
All right, thanks. Now, I think we still have 8-10 minutes for your questions. I'm sorry I didn't leave longer for that, but if any of you have some questions about anything, we're wide open. It's got a couple of great panelists here to address your questions. Don't be shy.
Who's going to be first?
Hi. Thank you. Very informative. So when it comes to VC, I work with a company that helps build teams for high growth CPG across the spectrum, pet, food, beverage, the whole deal. I'm curious, when it comes to AI, are venture capitalists looking for AI readiness in like a job description? Is there someone who's like an AI coordinator? It's like you have to be AI savvy, but do you look for that yet? Or do you think that we'll be looking for that in the future?
I think AI is everything. There's nothing more important. If you're not waking up every morning and the first thing you do is you read AI news or you play with AI, AI, you're behind because the people that are waking up in the room next to you, that's exactly what they're doing. So how do I find that in a resume? I assume it is there. And I check for it on calls when I have I assume it's there. If it's not there, I will see it pretty soon. And that to me is a red flag. If you're not actively vibe coding, if you're not actively working with ChatGPT, you're building teams. So that's a really important thing for you. And I would start today, have some questions, ask ChatGPT what those questions should be, and ask those questions. And I guarantee you in a few months, you will develop a feeling whether or not this person is doing. We're all learning. There's no one's an expert yet. I think we're all learning right now, and we all should be learning every day. So that I'd hire the learner before someone that has AI, because I think we're all learning.
Yeah, and I would say, I think traditionally technical teams have been siloed. So if you were using technology, you were in a certain department, and everyone else was a user but not really responsible to go deeper. AI truly democratizes your ability to interact, to build, to ideate on technology. So if you're in a specific function, you have a requirement inbuilt for you to use AI to make yourself better, because it is democratized. If you're in sales, you should be using some of the AI BDRs. You should be thinking about how it makes you better. Now, if you look at large technical teams, yes, they will have, certain areas and certain, individuals more specialized than others. But as a general rule, I completely agree. It's inbuilt into every function. So as a user, you really want to ask yourself the question, how do I make myself more effective?
Hi, Brian Ng. I'm a commercial leader for pet CPG and pet retail. I'm curious as to what the impact has tariffs had on your outlook on the attractiveness of the pet space.
Do you have tariffs questions?
You guys built that in?
I have tariff answers from a non-pet perspective, but I think it applies across the board,
Yep.
right? So we do have a number of companies that sell physical products that often are imported. And I think the warning has often been this assumption that you can necessarily pass it on is not always the case, especially in the short run. So really thinking about how do you build a gross margin that can survive as tariffs do come on. If you have a very small gross margin and there is a 30% tariff, you now no longer have a gross margin. It's gone. But if you had a 50, 60% gross margin, you have a buffer. And I think that's the short-term question. The long-term question is, how do you build sustainable and durable supply chains? So thinking about how do you onshore certain aspects? How do you protect yourself against particular countries being tariffed? And how do you just make sure that you protect your entity and protect your cost basis as much as you can?
I don't have a good answer for that.
Another question?
Lou, I'd love to get you guys' thoughts more on the specificities of the longevity emerging market. Like, what are your thoughts on that? How exciting is that for you guys?
Sure. Great question, Patrick. Patrick is a founder building something longevity. Please talk to him. He's got a great product. So I am really excited about the companies that I'm seeing that are coming out, trying to make the lives of our pets longer and better. So health span and lifespan. We are learning very fast from the human longevity space that is developing therapeutics that could create longer lives. You guys have heard of Loyal, I'm sure. And if you haven't, please look it up. It's a great company developing basically drugs for our dogs to live longer. We are so excited about the human space. We've all, we've heard of things like function health, or we've heard of things like, making sure that we are taking the right supplements for ourselves. Everything that is happening in human will ultimately happen in pet. I created a company, a DNA testing company. We looked at 23andMe and we just copied everything and we brought that into the pet space, and it was very successful. So I think there's an opportunity. I'll speak to that more than anything else. There's an opportunity to learn about human longevity and to see what technologies or what business models work in human longevity. And if you're a longevity buff and you're here today, really think about that. Ask ChatGPT. Is there anything that's doing really, really well in human longevity and what you can bring into pets? Very often you'll be early, but sometimes you won't. So with the DNA test, we weren't. It was the perfect time.
Yeah. No, I think as an investor, it always comes down to a willingness to pay and a number of potential buyers. And I think the really exciting part about longevity is, if you can actually have a meaningful impact on a pet's life and quality of life, people are willing to pay. And that's what makes these so fundable and makes them so exciting across the board. Now, obviously, we want to democratize it as much as possible and make sure that it's a fair price and drive that. But I think that's where there's so much potential. And I think just to your point around human health and pet health, right? You're absolutely right that human health moves faster, gets much more investment, as it should in many ways.
As it should, yes.
But pet lags. It lags too far. And I do think we are going to get to a world where you do actually see pets sometimes even further ahead. Because from a regulatory standpoint, right, it's a little bit easier, it's different.
Yes.
And I think you can actually create advantages and actually create a speed of innovation. And I think we'll see it. It might take a while, where we hopefully see pet, really pushing ahead as well. And maybe human health also learning from it.
Yeah, I just want to add to that. I really agree with that. I am seeing our dogs closer and closer to our kids in terms of how we think about them. 5 years ago, they were pretty close. Now it's like our baby, my dog, it's one. So if that is the mindset, what are you building? What's the next company you're building? You're not building the next kibble. You're building the next product that will treat your pet the same way that you treat your kid.
Hey everyone, this is Mark Donovan. It's great to see you, CEO at Positive Touch, where we're building the world's first active emotional care platform for dogs. Big problem. You talked a little bit earlier, you touched on this idea of the first meeting, and I'd love to hear a little bit more context on, for each of you, what's that first meeting going to look like in terms of content, story, the time you spend with a founder that's going to make you walk away and go, okay, I got to talk to this person
Meeting,
again.
email, or phone call?
First interface where you're talking with them, either in person.
Allotted time, you found the investor's ready to hear you.
Exactly.
I mean, you have to tell a story. Like that is the whole purpose of that, is to tell a story, to have a conversation and take someone on a journey. So we generally say, you know, bring 10 slides. I don't want to be prescriptive. It doesn't really matter that much. Just don't bring 100 and don't bring one, right? Like bring a number that allows you to show different aspects of it, right? Solve the pain point, show why it's worthwhile, talk about the market, talk about what you've done, talk about the traction, but most importantly, get them excited about what you're doing. Because if you can form that bond, if that investor is nodding, looking, smiling, like we all know the human emotional side, right? Like they're excited. If they're on their phone, they're probably not, right? And very often it's like you have 30 seconds to get someone excited. So just tell the story, tell them, show them excitement.
I mean, click. Hi, I'm Anna. So nice to meet you. I'm building this company. You're looking straight into the camera. If it's on the camera, you're looking straight at the person. You're smiling. You've got tons of energy. You're very confident because you practiced 20 times in front of the mirror and you know exactly what you're going to say. You're not stumbling. You're on it. And you're on it. If you're in person, you're on it for 30 seconds and you're looking me straight in the face and you're funny and you're engaging. And I like you. I like you. That's the first thing. I have to like you, and then I'm listening to what you're pitching.
Yeah.
And I learned that. I was on Shark Tank. They taught me this. This was a whole course that they teach you about how to engage with an audience. You engage yourself first. You sell yourself first in those first 15 to 30 seconds. You've got a smile. You're saying good morning. You're talking about, and we always talk about our pets. So if you're talking to me, I hope you're showing me your pet. And then you're telling me about your company. And yes, when it slides, 10 slides. I think 10 slides, that's prescriptive. It's a really good idea. God, I hated making slides back in the days. Now you can make slides through AI. It's so easy. Your slides are perfect. Everything's great. You know how to talk to them. And, you know, 20 to 30 minutes is good. It's enough time. We know what we're doing. Give us the pitch. Let us enjoy the conversation. It doesn't have to be longer than that.
Yeah. And I think, just to touch on that, all good points. Be authentic, which is, I think, you know, really what you're driving at. Don't try to be overly salesy. Don't try to just like overly convince someone through the passion alone. Like just walk them through it. Be yourself, be excited, but don't try to be someone else. Because it's like when you get a salesperson that makes you cringe. We've all had that experience, right? They just make you cringe. And you're like, half the reason why is the authenticity is gone. I can't speak to you as a peer. I can't have that honest dialogue. So don't lose that.
Yeah. Yeah, sorry if I made you cringe just now. That's just who I am.
No. Like, no.
That's me being authentic.
One more.
Yeah, so you mentioned high spending pet services for like high income pet owners, like pet flights or longevity care. And how do you see opportunities in lower to middle tier markets? If someone is going for those market, how can their product click with people from VC? And a little bit background on our product is we're building a peer-to-peer cat sitting service platform for young professionals. And for products like ours, how can we appeal to VCs?
I'll start with that because when I hear low cost, I hear high CAC. And low cost better mean high LTV. Low cost better mean something that is recurring in revenue because CACs are very, very high right now. And if your LTV is low, if it's $20, $30, it can be an amazing product. But to get to the scale where you have so much marketing out there about you, it's really, really hard. So when I look at a product, I'm very familiar with you guys' product. So when I look at your product, my first question is going to be churn, retention. What are you guys doing to build community? Let's talk about your social reach. Those are the questions.
Yeah. And I think it's spot on. It comes down to unit economics. If you charge a lot, right, your gross margin dollars are much higher. You have more flexibility. So if you have a lower price point, completely fine. But you have to be able to back up all those supporting numbers right behind it. Because I do think that unit economics are probably one of the fundamental issues that a lot of investors have when they look at the sector. They see a lot of products and they get really excited and they go a level deeper and they go, this churn is out of control, or this CAC is way too high, or how are you going to do this at 10x the scale? And I think those are the questions that we need to push ourselves to really get to and answer.
Those were great questions. This was terrific advice from two of the most approachable venture investors in our small community. Let's give a hand for Arif and Anna.